The Nasdaq just closed at a brand new record, all-time high. It's up 25% this year. The price of Bitcoin is just a touch away from a brand new record, and the price of gold hit a new record all-time high. I'm Jessica Amir. Welcome to the Daily. I'm a market strategist with Mumu. Well, investors are increasing their bets of a potential Donald Trump win next week. Trump media shares are now up an outstanding 357% from September. They're up $8 billion in market value. In other words, if you invested $1,000 in DJT just when the polls and betting agencies started suggesting of a potential Trump win, you'd now have $4,570. Meanwhile, the price of Bitcoin is $200 away from a brand new record all-time high. It's well and truly over $72,000 for the first time since March. Of course, everything is in US dollars. But what happens if Trump gets in? Well, many are expecting Trump to allow the king of all cryptocurrencies, Bitcoin, perhaps to be used more so as a currency. In terms of company news that you need to be across, after the market closed, Google owner Alphabet, their shares lifted 5.5% after they reported a far better than expected earnings report from greater than forecast Google Cloud growth. Now, this is the world's fourth biggest company by market size, and their revenues rose to a record $88.2 billion. That's a record, and it surpassed the mere $72.8 billion expected. Again, that's in US dollars. So a huge beat. Now, consider this. Google is actually the third biggest cloud provider in the market, of course, behind Amazon and Microsoft. But this result really shows you that the cloud market is so large, there's room for more than one winner in the cloud market. And companies are increasingly using Google's cloud, which is expected to continue, and that'll probably continue to grow their revenue and support their share price growth. Google results also do highlight that, contrary to perhaps what my mum might be thinking when she's watching this, that Google is clearly not dependent on its search revenue to grow its bottom line. And guess what? Google's revenue in its eclectic collection of other businesses grew as well. That includes growth or revenue growth in their self-driving car, Waymo, and their life sciences division as well. Meanwhile, Google also announced big investments into nuclear power to, of course, handle their load of future technology. And for those watching at home, we have indeed been speaking about why you need to consider watching uranium companies and uranium ETFs. And this is perhaps just another reminder. Back to Google, though. Google, of course, as we know, is the largest company to report so far this earnings season. We did last week have better than expected Tesla earnings. So perhaps these results together show that we might be expecting great things from other Magnificent Seven names who report this week, such as Microsoft, Meta, Amazon, and Apple. Also consider that Google's biggest supplier is Nvidia. In other words, Nvidia's biggest customer is Google, and that accounts for 6% of Nvidia's sales. Microsoft accounts for 18% of Nvidia's sales. Meta accounts for 10% of Nvidia's revenue. Amazon accounts for 5% of Nvidia's revenue. You get the drift. If we do get better than expected earnings results from these companies that I've just mentioned, we could not only see a boost in Nvidia's shares, but also in the Nasdaq, also as well in the S&P 500. But do consider what would happen if we get disappointments. The market could fall. But consider this before we let you go. The good news is so far US earnings season has been far better than expected. 235 companies out of the S&P 500 have reported, and earnings are up a lot. Earnings are up 9% in the quarter. Annualized, that equates to about 36% revenue growth. That's far better than the 15% earnings growth expected. So things are pretty good. It looks like the US economy is in good shape, and companies are continuing to grow their earnings, and that supports share price growth. And that's the Daily.